Well, hello, everyone. Julie Gardner here with Rise Up Wealth. I'm so excited because I have something great to talk to some of you that are not yet in a new house or you're tired of paying rent. And some of you are listening to this and you're thinking, my son or daughter needs to know this. You can share for sure. But what are some good investments? Your home absolutely is a great investment. It's one of the best ways to go into debt. Don't tell that man with the DR initials. That makes him nervous. But where do you start? And when I got my first house, and actually I'm still in my first house, I didn't even know what a mortgage was. So, hey, ChatGPT, what is a mortgage? But let's dig into deeper things today. And when's the right time to buy? And why should I wait? Or should I wait till the mortgage rates go down? What do I do? These are all questions that might be going through your head. So I don't know squat about mortgage, but I know people that do. And today we have expert Jason Maxam, and I love his company name, Creative First Mortgage. Does that sound like you might need to be creative to get your first mortgage? Well, he has 16 years of being in the mortgage industry, and he is going to answer some questions for us. So, Jason, we're so glad you're here. Yay!
Glad to be here. Thanks for having me on.
Absolutely. And for you multitaskers, this is where you can find Jason. And you're like, oh, let me write down questions. I got to write down his website because he is going to be somebody you're going to want to have another conversation with later. So, Jason, 16 years in the business, but now you have your own brokerage. How did that happen?
Yeah. Actually, quick correction. I've been in the business over 23 years.
Oh, but you look so young.
Oh, thank you so much. Well, it's probably the filter I have on right now, but thank you so much. I'll take the compliment where I can get it. But so 23 years in the business. One of the reasons why I started, so I'm an broker owner of Creative First Mortgage. My office is located in Hoover, Alabama. We're licensed in 6 states nationwide. And one of the reasons why I really wanted to go on my own, Julie, is because, there really wasn't a good fit for a top producing loan officer with a fair split, in my opinion. A lot of people need help. And, in the beginning, I needed a lot of help getting into the industry and kind of learning the ropes and working under people that were, a lot more knowledgeable than I was. But as you grow into, your own and you have your referral base and you have a nice, flow of business coming in, you really don't need a lot of help. So what I wanted to I wanted to do this for 2 reasons. So number one, I wanted to set up a place where a loan officer like myself, because I couldn't find what I've set up, someone that would literally give 100% of commission to a loan officer that doesn't need training, that doesn't need a lot of assistance. We would do all the back end operational support. We would handle the licensing, all the compliance, and we would just take a per deal fee out of every loan. So running numbers on someone that was closing, let's say 5 loans a month, which is a pretty good producer, on an average on a $350,000 loan amount, they would make an extra $180,000 with my company. So why do I need to take more from that person? Why don't I help them expand and grow the business that I wanted to do? And so that was really the first reason I wanted to open up my own company. The second reason is really, I wanted to be able to do outside the box loans. So someone that, most of my clients are first-time home buyers and they don't have 800 credit scores and 20% down. Right. A lot of self-employed borrowers, they maybe not show enough income or that need down payment assistance or, that can do what's called a light doc program where we can use bank statements, for example. I wanted to be able to sign up with all the investors that do those niche products. So that was really the second reason why I wanted to go on my own. And we literally have every product under the sun. And that's where Creative First Mortgage came from. Sometimes you have to be a little bit creative to help people get into loans.
That's right. And, when I first got my house, and I'm actually in a condo, I was in an apartment and then I was like, oh yeah, I should get out of paying rent because that's not a good investment because I don't even know that I got my deposit back when I moved out after a year and I didn't make that much of a mess. And then I didn't spill spaghetti on the ceiling. None of that. Then I got into a condo and then I actually refinanced a couple of years and paid it off. And I don't know that it just didn't cost much, but I'm a terrible mortgage client because I haven't moved yet. My cousin now, however, she's moves every like 5 years. I'll give you her name later. But yeah, I had a first home buyer offer and that was a nice deal. But it was funny because I made the application and then I was like, oh, we're done, right? No, that was just the beginning. So my tip when you are buying your first home, gather all your papers and just stick it on your desk because you will refer back to it.
Yeah, for sure.
Yeah. And how long does that process usually take from start to finish?
Yeah, that's another great question. So, the beginning process doesn't take a lot of work. We send out a loan application. It's very simple. It probably takes about 10 minutes. We make it very easy. We have an app and a link that you can do right on your phone. And once we have that application, we can really determine what paperwork that we're going to need. But typically what we're going to need is income, asset docs, ID, and a range of, whatever price range that they're looking for. And with that, I can come up with a plan. So, depending on how quickly they can get the application and the docs to me, a pre-approval really can be done within 24 hours.
And, sometimes somebody might be savvy in how to shop a mortgage. They actually knew, oh, I don't have to just go to the bank. But sometimes they're shopping rates. And then sometimes, now, several years back, like I bought my place 20 years ago, I could get qualified for double and triple what I really should be paying for my mortgage. So I don't know if that was accurate. I hope those practices have changed. But what would you say would be important for someone to look for when they're looking for a loan officer to work with? Should it just be about rate? Should it be about, well, you're my golf buddy?
Yeah. Yeah, no. So it shouldn't always be about rate. Now, rate is obviously very important, but you need someone that can guide you through the process, especially first-time home buyers. So like you said, you can probably buy, a $500,000 home, but you don't want to work to pay your mortgage. So the initial pre-approval process goes over those steps. So let's find out what amount that you and your family are comfortable paying, and we'll kind of work in reverse to determine what your sales price is going to be. So, rate obviously is going to be determined by a lot of factors, but you want to work with a broker. And whether it's me or not, listen, mortgage brokers, I think the number now is like over 80% of people go through brokers now. And there's a couple of reasons for that. Number one, some people just don't fit, like I said, into that small little box that maybe a bank could have. Banks are really good at banking. They want your depositories. They can do your car loans. They want to give you credit cards. All we do is mortgages. So we focus on one thing and we do it really, really, really well. So yeah, I would say that starting with someone that kind of gets to know what you're looking for, we kind of work that way and determine, hey, this is how much house you can get based on the payment that you want, not necessarily what you're qualified for.
Right. Right. My husband, I scared him because I said, hey, we can afford this big house. So we looked at this one house and I said, wait, there's like 3 or 4 bedrooms in there. I said, I wouldn't like having an empty bedroom in the house. So maybe my aunt could come live with us. And he was like, no, we're not moving. No extra people are moving in with us. So, and he squashed that really quick. So that's why I haven't moved yet. He goes, our house is the perfect size. You can't have parties and not too many visitors. But if someone's paying rent and they're paying for their own, rent's high. I don't care. I don't know the cheapest place. My rent, by the way, 20 years ago was $515 a month. I had a deal. Right. And my mortgage was $550 a month, which was another deal. And by the way, my rate 20 years ago, I think it was like 6.4 or 6.3. So even though the rates are high now, they're not 3%. Who cares? You can afford it. It's still a good investment. But if someone is in an apartment, can they afford it usually to go ahead and get the house?
Yeah, so that's where it really comes down to, once we have a conversation and figure out what their budget is, we can kind of determine what's going to be the best, for them. And I would say this, listen, if you're renting, like rents continue to go up, right? It almost becomes unaffordable in some cases. Yeah. With a mortgage, it's really a hedge against inflation, right? Because if you're locking into a fixed rate, your mortgage isn't going to change. And then the other question I get a lot is, well, Jason, shouldn't I wait for the rates to come down a point? What's that going to look like? I just don't feel like I want to get into a 6 or 7% interest rate right now. And hey, that may be the case, but I've got a great calculator that breaks it down very simply for my clients that shows you if you were to wait, let's say the rate today is 6.5%, and you wanted to wait for the rate to get to 5.5%, and it took 2 years. Well, if you look at the appreciation, just the average appreciation over the last 2 years, think about this. If you've got a 5% appreciation, you buy a $300,000 house, you're looking at over $30,000 in appreciation that you've lost essentially. So wow. My goal is to show someone, listen, at these elevated rates, they are a little bit elevated right now, right? Based on what we were used to. Let's find something that you can afford today. Rates are going to come down. Do I have a crystal ball? I don't. They are in a decreasing rate. We are in a decreasing rate environment right now. We've seen some great drops lately, but we can always refinance that property for you. So let's find out what you can qualify for today based on the rates today, and then look at doing a refinance in the next 6, 12, 18, 24 months, whenever it makes more sense.
And refinance was not a big deal because I refinanced it and I was like, okay, no big deal. And yeah, it all worked out.
Yeah, we have a streamline. Yeah, we locked a VA loan today at 5.49%, I believe. So VAs can get really quote. And by the way, we get wholesale rates. So rather than retail rates, and that's something that we can talk about with our clients as well. But a streamlined VA takes 5 to 6 days to.
Okay, and let's say you are living in an apartment.
So you're right. It could be a lot quicker than a purchase.
Oh, okay. So let's pretend you're in an apartment. Let's say I'm 26 years old again. And I'm trying to decide, should I date and marry the veteran or should I date and marry the school teacher, or should I date and marry the guy that, I don't know, is on the fast track to CEO of Regions Bank? Based on deals and mortgage deals that are out there for VA and for teachers, who should I pick? Bachelor 1, 2, or 3?
Yeah. So listen, I'm really good at mortgages. I'm not great at dating advice. I have been married though for 24 years. So I do have some track record there. So I really can't tell you who to marry. However, they are great.
Who's got the better deals for mortgage? Yeah.
Yeah. So there's great programs for everyone, really, to be honest. We have first-time homebuyer products. We have little to no down payment, depending on where you live or where you want to buy. We have what's called USDA loans where you don't need any money down. VA loans are no money down, no mortgage insurance. And then we have your standard conventional and FHA loans. And so it really just depends personally where you are and what you can qualify for. So I'll give you an example. If you're a first-time home buyer and your credit's not so great, let's say you got a 600 credit score, you've had some dings in the past, but you've got some good credit that you've worked up. We can still go as low as 3.5% down on an FHA loan down to a 580 credit score, right? So there's options for a lot of people. Now, if you have a better credit score, let's say you're a 720 or, higher, you get the cream of the crop, I like to call it. So that would be probably a standard conventional loan. So there's just so many products out there. Honestly, you don't have to marry someone to get a really good mortgage.
Okay, so maybe I'll just marry the one with the best credit score, period. Maybe that'll be my
or maybe one that you love. That would maybe a good start, right?
That might be. Yeah, marry for love, not for money. Absolutely. And I'm a proponent of, ladies, y'all better figure out your own finances. You can share, but you better come up with it, because your man is not your financial plan. Just saying.
That's right.
And men, she's not your financial plan. Would you say?
I said you're a poet and you don't even know it.
Ooh, tell it. Okay. That's a whole nother podcast. Well, What keeps you motivated in this business? Because you've been at it for, you said 23 years?
Yeah, 23, a little over 23 years. Yeah. So, I mean, listen, when I first started in this business, I quickly realized, because I've always been in a sales or business development capacity, but I didn't always believe in the product I was pushing. And so when I found mortgages, it was really kind of a match made in heaven. Now, I will say this, it is a super stressful business. I'm not going to sugarcoat it. It's not easy what we do. And there's a lot of moving parts. One time I mapped out all the things we have to do on a loan with my team. And I think we came out with 63 things that you have to do from pre-approval to closing. So it is a lot of work. But honestly, I think my passion just comes from helping people. If you can give someone a product that is truly good for them and meets their needs, you're not only going to satisfy what they need, but you're also going to get referrals from other people. And so building a business based on trust, based on referrals, is really, truly a passion that I've kind of dug into and I really, really enjoyed. So, in terms of the stress factor and the satisfaction factor, you kind of find that balance by helping people over time, over a number of years.
That's amazing. Yeah. And if you didn't love it and you weren't doing good work, you probably wouldn't have been doing this long.
Oh, I wouldn't. There's no way. There's no way.
Okay. So that 26-year-old in the apartment that's shopping for her man, she, I will take that off the table, but is there anything that I should avoid, any pitfalls that maybe 6 months out of me getting my mortgage done? I've just heard different things. So, can you give any tips or things to avoid if someone's trying to get their mortgage situated?
Yeah, it's a great question. So here's what I would say in the beginning. At first, find out where you are, right? So talking to a loan officer, finding out where you fit and what you need to prepare for is probably the most important thing. But I would say, once you go through the approval process, you don't want to do any major changes, right? Don't quit your job. Don't buy that Chevy Camaro or Corvette that you want right now. Don't open up any new credit. And, don't co-sign for someone. I mean, that's one of the worst things I've seen, where you got a family or a family member that needs a car and you co-sign for them. A lot of times that payment kicks them out of getting approved for a loan. So, the most important thing I think to prepare for it is, if you're looking to buy within the next 3 to 6 months, talk to a loan officer. Don't be afraid to do it. It's a free consultation with us. It's not going to hurt your credit. We'll just go through the process, find out, A, what are you looking for? B, what your time frame is, and C, what, if anything, do we need to work on to get you that best approval?
Yeah, it never hurts to have a conversation and just find out more information, right? Well, this is awesome. I think this is great. If there are any 26-year-olds that are looking for a house, you can get the house without the man. It's all good.
That's right.
If you guys have any questions or you want to add some more feedback on what upcoming topics you'd like to hear, you're welcome to email me. If you just want to say, Julie, you're a bit silly, tone it down, or we need some more lively action or puppets. I'm not adding puppets, but if you need puppets, I might consider it, but you got to email me. And then our next episode, we're going to talk about when you do get your house, how do you budget for the maintenance of the house? So, Jason, I love it that you were here with us. This is Jason's website, all the ways you can contact him. He is so on it, y'all. He's a top producer. He's experienced and he's got the support he needs to make it happen. So send a friend to his site, pass this, share this podcast. And Jason, any last words or of wisdom?
No, I think that's it. Listen, the website has my personal cell phone. I'm available, 6.5 days a week. I try to take Sunday to just be with my family and that's my church day. But listen, I'm still answering personal calls. I'll still take one-on-one consultations. I always like to meet my client. Everyone that comes in, I want to have a conversation. So whether you're on the fence or whether you're ready to go, let's set up a call and see what we can do to help.
Awesome. Yeah. Let's stop throwing your money away in rent. Let's get you investing your money, having your money work for you. I heard this statistic. You can tell me true or false. If you were to sell your home, you'd get about 40% of your money back. Because
it depends on how long. Yeah, it depends on how long
you're in 5 years, maybe 5 years of owning it.
And it depends on the price as well. So like you got to figure that we're generally running at about, depending on where you live in the country, anywhere from 3 to 5% appreciation, even in this economy. So we've seen these really quick, inflated prices that's occurred over the last few years, especially after COVID, right? Because everybody wanted to buy a house because why? Interest rates are at 2.5 to 3.5%. So we had this great shoot up because of the supply demand. And now we've kind of been more comfortable, especially in Alabama. We've seen a nice steady 3 to 5% increase in appreciation. So, depending on where you are, it's a really a great investment. It's the only debt that I would recommend someone to take on because it's positive debt. It's tax, there's tax advantages to owning a house. You get to write off a lot of the interest that you pay on a home. And like you said, most folks now, their biggest and greatest retirement is in their primary residence. So I would encourage someone to look at those numbers. And by the way, we have all those calculations too. We have a rent versus buy comparison in our, that I can do for you. The cost of waiting versus the cost of buying. We have all of those tools at our disposal to help buyers make that right decision for them and their family.
Y'all, I don't know what y'all are waiting on. I'll be calling Jason up going, ooh, let's play with all your illustrations and reports. That's awesome. Yep. Thanks, Jason. And keep getting people homes. I appreciate you.
Julie, thanks so much. I enjoyed this.
Have a great day. Bye.
Bye-bye.